Prediction market prices can look simple at first. A contract trades at 30 cents, 60 cents, or 85 cents. But those prices are doing more than showing what it costs to enter a trade. They are showing how the market is currently pricing the chance of an event happening. That is why understanding prices and probabilities is one of the first skills beginners need in prediction markets. How to read the price. Here's the simplest way to read it. If a yes contract is trading at 25 cents, the market is roughly pricing that outcome at a 25% chance. If it is trading at 50 cents, the market sees it closer to a coin flip. And if it is trading at 80 cents, the market sees that outcome as much more likely. But an 80-cent contract does not mean the event is safe. It does not mean the outcome is guaranteed. It only means traders are currently willing to pay a higher price for that side. Price shows confidence, not certainty. In prediction markets, confidence has a price. The more likely an outcome appears, the more expensive that contract usually becomes. The less likely it appears, the cheaper that contract usually becomes. But the final payout does not change. Most contracts still resolve at $1 if correct, or 0 if wrong. That means every price has a trade-off. A cheaper contract may offer more upside, but it is usually cheap because the market thinks it is less likely to win. A more expensive contract may look safer, but it has less upside and can still lose if the outcome fails. The risk-reward trade-off. For example, buying a yes contract at 20 cents means the possible gain is larger if it settles at $1, but the market is also saying that outcome is unlikely. Buying a yes contract at 85 cents means the market thinks the outcome is more likely, but your possible gain is smaller, and the downside is still the full 85 cents if the market resolves against you. This is why price tells you both the implied probability and the risk-reward balance. Why prices move? Prediction market prices move as information changes. A sports injury, an election poll, an interest rate decision, a crypto price move, or a breaking news story can all shift the probability traders assign to an event. If new information makes an outcome more likely, the yes price may rise. If it makes the outcome less likely, the yes price may fall. That means prediction market prices are not fixed predictions. They are live estimates that update as traders react to new information. Probability versus value. There is also a difference between probability and value. A contract can be likely and still be a bad trade if the price is too high. And a contract can be unlikely but still be interesting if the price is lower than what you believe the true probability should be. For example, if a contract is priced at 30 cents, the market implies about a 30% chance. But if your own research suggests the real chance is closer to 45%, you may see value there. That does not mean you will be right. It only means you believe the market may be underestimating the outcome. The key question. This is the core idea behind trading probabilities. You are not just asking, will this happen? You are asking, is this outcome priced correctly? Beginners usually focus only on the event. Experienced traders focus on the price. Because in prediction markets, being right about an outcome is not always enough. You also need to enter at a price that makes sense for the risk you are taking. Conclusion. So when you see a prediction market price, read it in 3 layers. First, what probability is the market implying? Second, how much upside and downside does that price create? And third, is the market price reasonable based on the information available? If you can answer those 3 questions, you are no longer just guessing. You are starting to think like a prediction market trader. Subscribe to our official Trade Handle YouTube channel for more simple breakdowns on Kalshi, Poly Market, Crypto.com, event contracts, and the future of prediction markets. For more prediction market news, data, and insights, visit tradehandle.com, the home for covering the prediction market as it evolves.